When evaluating the potential market impact of zero DTE options, there are two approaches that we can take. The first is by looking at market maker net positioning, while the second is by looking at the S&P index itself to see whether or not we've seen a pickup in volatility, whether on an intraday basis or close to close basis, and whether there has been any abrupt changes to the S&P price pattern over the past 2 years since zero DTE options have become popular. So the one way we look at it is by looking at S&P realized volatility on an intraday basis compared to close. And as you can see in the chart over here, what we have observed over the past year is almost exactly in line with the 10-year average, meaning we're not seeing any material changes to S&P intraday volatility as one might expect if you think zero DTEs are becoming outsized relative to the market. Another way we can slice this data is by looking at minute-by-minute returns in the S&P index itself and seeing if we're seeing higher frequency of quote-unquote gap moves in the S&P. That is, large moves in the S&P relative to its recent trading pattern. So the way we calculate this is by looking at 1-minute returns in the S&P compared to its previous 30-minute realized volatility and isolating the frequency of 2 sigma moves in the market. And as you can see in this chart over here, when we look at the data this way, there also has not been any material increase in so-called gap moves in the market. So the conclusion is, empirically, we have not seen any material increase in the S&P index itself that could be on the back of zero DTE options trading. Hi, I'm Mandy Xu. For more volatility insights, please subscribe to my mailing list at the link here.